Okay, everybody, it's me, Gregory Mannarino. It is Monday, September 6th, 2021. The market is closed today. As most of you know, I informed you how this was going to play out on Friday, that you would see me right here and right now for my newest segment of Markets A Look Ahead. Okay, so what's going on? What do we need to keep our eyes on? And what can we expect, well, I guess this weekend moving forward? But again, before we do that, we must look back. What happened last week? What seriously profound events occurred last week that have the potential to move the markets this week? Well, it's pretty straightforward. Last week, we got the worst, bar none, the worst jobs reports, plural, that we have had in a very long time. In fact, like I said, they were so bad. They even surprised me. I expected them to be bad, and I'm sure you did too if you followed this blog because you understand what's really going on here. But these two reports are out of control. But again, it falls right into place as to what is going on around us. We are in an economic free fall with no end in sight. Zero. This is going to get worse. So the setup is very simple. This morning, I don't know how many of you had the, displeasure of watching Bloomberg. Bloomberg this morning, they had a couple of analysts out there explaining how these abysmal jobs report, they're going to force the Fed to, move goalposts. The Fed can't possibly be tapering here. Duh. Come on. You see, now I'm getting all uppity here. It's beyond belief, seriously. The dog shit literally wrapped in cat shit, sprinkled with bird shit, they're trying to shove down people's throats here. You can't make it up. You can't possibly do it. You got CNBC, Bloomberg, Fox Business, generally, they're trying to be cheerleaders, or they're being told to cheerlead the economy. Our economy is in free fall. And our economy is contracting at its fastest pace in history. No one's talking about it. I am waiting for just one of these, financial news outlets to explain to people or let them in on the big secret that as a percentage of GDP, I've been explaining this for months, our economy is shrinking massively and rapidly, and henceforth why we continue to get round after round after round of bad economic news. If our economy is shrinking at a very fast pace and it's out of control, well, how would the economic news be good? It can't be good. And if you believe, yet again, that any of this is by accident, you're deluded. You have no clue as to what is going on here. Now, with regard to the Federal Reserve moving goalposts, how about another duh? I told all of you this was going to happen. They're going to continue to move goalposts until, whenever. It's not going to. They're not going to taper. The Fed doesn't want to taper. This entire environment has been created, literally manufactured, including the scamdemic, globally, to allow central banks to fulfill their final solution, their end game to own it all, to be the lenders and buyers of last resort. People, inflation is surging. We're going to get a couple of reports this week regarding inflation, and we're going to find out yet again that it is skyrocketing at its fastest pace ever. Meanwhile, the Fed is going to continue to run their inflation creation machine. And you know what this is. It's in everybody's face. But again, no one's talking about it. Maybe once in a while you get some information on this. So we did hear from a Fed president last week who was concerned about this exact mechanism of the Federal Reserve issuing debt through one door, buying it back through another door. It continues. Billionaire investor Ray Dalio speaking about it. So there are people besides Greg Mannarino who are trying to raise awareness here. And we're not done by a long shot. with regards to seeing inflation creep up on all of us. And again, the excuses are going to be, oh, look at energy prices, they're surging. Oh, supply chain disruptions. Oh, blah, blah, blah. But we're still booming. How do they justify that? I mean, you can't make this stuff up if you try to. But that's where we are at. So again, looking back at the economic news, which is going to continue to be terrible. That's a main driver for the stock market to go higher. Higher and higher. I'm going to go out on a limb right here and right now. Let's look back at this video, the end of the week. I'm going to tell you that this market this week is going to end higher than it opens tomorrow. All right, that's just my take, gauging on the bad economic news. Now, a couple of other things we need to keep our eyes on here. We all understand the keys to the market. You know what they are if you've been following this blog, but I'll cover them just real quick so we can get a refresher course. That 10-year yield right now, 1.32. We are in a range, okay? We were recently at 1.37. We came down to about 1.21, and now we're back up to a 1.32. What is that telling us here? Again, we got this really bad economic news. No secret. The whole world knows about it. And instead of that 10-year yield dropping, which would be a sign of fear, it went higher. So what does it mean when that happens? Cash is leaving the debt market. It's looking for places to go. Henceforth, why last week, record high with the stock market. I would not be surprised whatsoever to see more record highs here this week with regard to the stock market. It's an insane thing. But again, it's a paradox. The worse the economic news is, the higher the market's going to go. As the market gets relieved, believe it or not. When the bad economic news keeps coming, the market gets a sigh of relief because it's like, okay, all right, the Fed, they're going to keep pumping. They're going to keep pumping and pumping and pumping and pumping. And what does that do? All it's doing is creating massive distortions across the spectrum of asset classes. That was Lacker, Federal Reserve President Lacker, who brought some of this to life, sounding exactly like me, talking about distortions in the across the spectrum and in asset classes, and that's going to continue here until it doesn't. We know this can't go on forever, people, but all I am trying to do desperately is keep you and me on the right side of this. That's it. I know and you know that this is not sustainable. This market is a hyper bubble. It's a hyper bubble being built on the back of the Frankenstein bubble of them all. And that's the debt market, and the Fed's not done inflating. I told all of you many, many years ago, the goal here of central banks was to continue to inflate and inflate and inflate some more. That's exactly what I told you. And that's exactly what is going on here. And they're not done inflating, and inflating some more, regardless of this issue with inflation, which we haven't seen anything yet with regard to an inflation surge. I'm telling you now, they're going to point their fingers at energy prices going up. They're going to point their fingers again at supply chain disruptions, period. You know that. Let us move on. So 10-year yield, like I said, came up a little bit. No fear. The dollar actually dropped on Friday. We'll see what happens with regard to the dollar, which right now is actually slightly stronger. Okay, so what the market wants to see is 10-year yield, where it is, somewhere in that range, like I've been telling you, a weaker dollar, duh, we all know that. Now, look, let me just cover this real quick with regard to the Dixie or the dollar index. This is not a standalone index, okay? When you're looking at this, it's the dollar relative to other currencies, all right? You need to keep your eyes on it. And I have it set up for you right on my website here, traderschoice.net. This is a phenomenon that's occurring around the world. Central banks, deliberately weakening their currencies, and this inflationary issue is a global phenomenon. I think you are all aware of that, but you must keep your eye on the Dixie. The dollar index is very important. I think you all know that. Crude oil, right now it's hovering about $69.50. Okay, crude is a key here to the markets. You all know that. OPEC wants it above $70 a barrel. They're going to get it there in short order. There is no doubt about it in my mind whatsoever. And it's the investment banks. They want it there too. So watch for those false flag events if we get a sell-off. If it continues to climb, okay, you don't have to worry about it. But once crude oil starts to fall under pressure, I start to fear for human life. Seriously, they will blow up a refinery. They'll bomb a base. Whatever they got to do, create even more unrest in the Middle East. We already understand what's going on over there and why nothing is what it seems here. They must keep the Middle East destabilized. The Middle East cannot ever be allowed to stabilize in any way, shape, or form. Anything that they can do to keep the Middle East unstable will be done to keep crude higher. Crude is the lifeblood of this market, is the lifeblood of the military-industrial complex. Without crude going higher, the stock market will go nowhere. Okay, so let's keep our eye on crude oil. Keep your eye on energy stocks overall. Keep your eye on financial stocks overall as well. Okay, very simple. They prop up crude oil, energy sector goes higher. The financial sector goes higher. It pulls the market with it. Record high, record high, record high. That's just the way it works. Period. Let us move on here, people. Cryptocurrencies continue to get bid higher. Bitcoin is almost 52,000 as I am doing this here. Bitcoin will retake its all-time record high within a relatively short period of time, and it is going higher. All of the major cryptos are going higher. Okay, like I've been explaining to you. I told all of you, buy those dips, and those of you that listen to me, because I bought those dips, have frankly destroyed it. I'm sorry I'm laughing, but you ripped its face off, and you're going to continue to do that. So we're in the right spots here. With regard to gold and silver, people, you know the game. Bet against the debt. Become your own central bank. Hoard this stuff, especially silver. I want you to do a little homework if you're new here, okay? If you're not new here, you're going to hear me repeat myself. I want you to look at the Dow gold ratio and the gold silver ratio. Okay, a little homework for you. You can open up another window while I'm talking, and you will see why I'm telling you yet again, physical silver, the most undervalued asset in the history of the world. Period. That's where we are at with regard to silver, so hoard it. Hoard it. Let them play their games, and we know who's playing it. This is JP Morgan. I'm going to keep saying it over and over again. They're going to continue to rig the price of metals via the derivative. I say good, let them continue to do that. We're in a hyper bubble with regard to debt. It's not going to stop. It's going to get monumentally worse. So what do you want to do? You want to be in an anti-debt unit, okay? And an anti-debt unit is physical assets, gold, silver, and cryptocurrencies because you own them. They're not owned or issued by a central bank. Okay, I've explained this to you as well. I know this space, the crypto space, is not for everybody, and I get that. But you got to be somewhere. So you want to pick an asset? It's physical silver, in my opinion. And I want you to do your own research. With regard to this market, I already laid it out for you. Okay, as long as the bad economic news is continuing, the market's going higher. As long as our economy continues to free fall, the market's going higher. Okay, as long as our economy continues to shrink as a percentage of GDP, and we've never seen anything like this before, ever, okay, the market's going higher. And we know when to get out. That's the key here. I want you to take that away too. All right, I have raised awareness with regard to the 10-year yield, I think more than anybody out here. I've been talking about this for years upon freaking years. I don't know, a decade, where I explained to people the importance of watching the debt market, the importance of watching that 10-year yield. We're going to buy the dips in this market, every single one, okay, the stock market, until the 10-year yield spikes in an uncontrolled fashion. As long as the 10-year yield remains relatively stable, remains in a range, the place to be, again, is on the long end of this market. If you are shorting this market, okay, and there have been a lot of people who have done this over the years and written to me, Greg, I wish I would have listened to you. I got killed. And you're going to get killed if you don't listen to me here. If you short this market with that 10-year yield remaining stable, you're done. You are virtually guaranteed to lose. Could you get lucky? Absolutely, you could get lucky. Okay, the market could drop several hundred points in a day, and what will happen over the next several days after that? Well, we've seen it time and time again. You're going to see that dip get bought right back up. You understand? Do not short the market with a stable 10-year yield, with crude oil staying propped up, with a weak dollar and the Fed's balance sheet continuing to balloon. All right, you short the market with those dynamics in place, there is something wrong with you. And I want you to win, people. I want you all to win. And you're going to win. I mean, if you look back at my work, I have been the most steadfast guy, I think, on the face of the earth. I've been telling you what to do, this exact scenario, I don't know, for a very, very long time, a decade. All right? I'm not going to deviate. As long as things remain the way they are, the dynamics in play remain the way they are, we capitalize on this by knowing what to do. And it's in our face. And you can follow all this stuff right on my website, traderschoice.net. And if you are so inclined, if you want a little extra information out there, subscribe to my 100% free lovely newsletter. There is a link in the description of this video for that, okay? I want to take care of you. If you allow me to do that, I will. If you think you're smarter than me, maybe you are, and you want to do the opposite of what I'm telling you, I wish you luck. I think you're going to need it. All right, look, love you a lot. Please share this video. Get it out there as far and wide as you possibly can. Thumbs up. I greatly appreciate those thumbs up. Makes me happy. And I hope you have a great day today. Do something fun for yourself, because tomorrow we really do got to get back to work. I'll see you in the morning.